This is the story of the man who turned $50,000 into $34 million using Gamestop. You probably heard of him. His name is Roaring Kitty on YouTube, Deep Effing Value on Reddit, and Keith Gill in real life. You may recognize him from the movie made about him, Dumb Money. This is the story, how it actually went down. There's a few questions that I have surrounding Gamestop. One, how did Roaring Kitty find Gamestop so he could make his incredible trade from 50,000 to tens of millions of dollars? How did Reddit supercharge the trade? Because I think a lot of us were paying somewhat attention that GameStop was going up in price and Reddit was involved, but how did that actually happen? Why did Keith disappear from social media? And then what happened this week? You see, everyone is talking about GameStop again. And so I want to go over the events of this week that's made us talk about GameStop again. And then we'll talk about the future of GameStop very briefly. Who am I? My name is Elias Marshall. I've been investing since 2016, and I'm not a genius. I'm not an expert. That's why I share stories of people who are experts, who are geniuses, dive into their history, find their secrets, and share them with you on this channel. So if you want more of that, it's probably a good idea to subscribe, for your own good, not for me. It's so you can get more knowledge. Anyways, our story starts in August of 2019, and it actually doesn't start with Keith. It starts with this guy, Michael J. Burry. You may have heard of him before from another investing movie where this guy shares the same name as him for some reason. Michael Burry got famous for betting against the housing market in 2008. He made his fund a few $1 billion when everyone else thought he was crazy. And in August of 2019, Michael Burry announces that he owns 3% of GameStop. He's been buying up the stock that everyone thought was dead. And this made Roaring Kitty, or Keith Gill, start looking into GameStop once he saw that Michael Burry and Roaring Kitty actually places a buy order himself. Now, we get to March of 2020, when the worst possible thing for a physical games retailer happens. I'm sure you know, we all went through it, the virus and the lockdowns. So by the time of July 2020 comes around, GameStop is suffering. Its stock is not doing too well. But despite that, Keith still believes in the stock, and he breaks down why in this video here. It's a 56-minute long video where he goes through all sorts of spreadsheets and data and covers the sentiment around GameStop, and he gives his case as to why he thinks there's too much negative sentiment and GameStop is undervalued. And these are just a few of his points of why he goes over that. He says that the move to digital was happening slower than everyone else expected. So in the gaming world, people used to buy games in person at places like GameStop or other retailers a lot, but slowly and surely online platforms like Steam or Epic Games have been taking away from GameStop's revenue. And so because of that, people were bearish on GameStop's stock. However, Roaring Kitty pointed out that the move was happening slower than they expected. He also pointed out that whenever new gaming consoles came out, GameStop stores got a huge boost in revenue, and he felt that that was undervalued in the current stock price considering new consoles were going to be coming out soon. And also, he pointed out that the new management team was being blamed for the mistakes of the old management team. So he felt there was too much negativity around it, and there's a good chance that they could make a 2x, a 3x, maybe even a 4x in a crazy scenario. And so he invests $53,000 at about $1 per share, expecting 4x at the most. Remember, he had no idea how insane this would get. And so in December of 2020, a few months later, GameStop is at $4 a share. It's 4x'd. And Keith is very happy. He posts this video on his YouTube saying, "Let's go." He's celebrating. He thinks that this has been a great trade. He says he's going to take some time off from streaming. He's going to enjoy the holidays, spend some time with his families. And he says, "I hope everyone had fun just participating in this case study." Keith thought that this was the end of the story. But Keith was not the only person to notice GameStop. And so we've covered how did Roaring Kitty find GameStop, but now we need to talk about the insane gasoline on the fire that was Reddit. And this is how Reddit supercharged the trade. A user by the name of Senior Hedgehog would post on Wall Street Bets, "GameStop, the biggest short squeeze of your entire life." And a few other users would make these similar types of posts where they explained that GameStop was primed for a short squeeze. What Hedgehog noticed was that GameStop has 65 million total shares. And out of those, 55 million were currently short the stock. So 84% of the shares were betting against their own company. Now, in order to understand this, I should explain short selling briefly in just 60 seconds. I promise it'll be really quick and you'll understand how short selling works. Let's say that Melvin Capital wants to bet against GameStop. Well, this is what they can do. Let's imagine that the GameStop price is at $10. and you over here have 10 shares of GameStop. So Melvin borrows your 10 shares of GameStop and they sell them instantly at the market price of $10. $100. But they owe you 10 shares of GameStop. And they pay you interest for letting you do this trade. So let's say they owe you $20 of interest. Now, if the trade goes correctly and GameStop price goes to $5, Melvin Capital still owes you 10 shares. So if they want to close out the trade, they buy back 10 shares of GameStop, and that's at a total of $50. And then they return those 10 shares to you. So if you can read through the lines of my chicken scratching here, they spent $50 on borrowing the shares. They sold them at $100 and they paid $20 of interest. 20 plus 50 is 70. So Melvin Capital made, let me get the green for this. Melvin Capital made $30 by betting against the stock. And that's how short selling works. Okay, now here's the thing. Earlier, we said that 84% of the shares were being used to short GameStop, massively suppressing their price artificially. But that's not exactly true. One thing that the Redditors noticed is that GameStop was actually 137% short. That's right. There were shares that didn't exist that were shorting the stock. How is that possible? Well, it's possible because hedge funds use a thing called naked shorts. They were promising to sell the stock before they even owned shares in the stock. Now, this is illegal, but they did it through some other means, yada, yada, yada. Basically, what you need to know is that the stock was massively overshorted compared to what its real value should have been. And Melvin Capital and other hedge funds made millions shorting this stock. However, they got greedy. They should have closed out the trade, but they stayed in it too long, and the Redditors noticed. Hedgehog and Wall Street Bets had caught them red-handed, and they were going to make them pay. This was Wall Street Bets' plan. Number 1, buy GameStop. Number 2, drive up the price. And number 3, hedge funds are forced to buy back shares to cover their losses. See, remember when I did the short selling tutorial, a key point of it is that you owe the other person the shares that you borrowed from them. You have to pay them back. So we covered the scenario where short selling goes right. But if short selling goes wrong, let me just break your immersion here and show my entire slideshow. Let's say the GME price didn't go to $5. It went to $15. Oh, uh-oh. And now you have to buy back your shares because you have to pay them back. Well, you're up $100. You're down $20. Now you buy 10 shares of GME, but you're not buying it for $50 because it's 15. You're buying it for $150. And so now the $30 of profit, get rid of that. What this really is, you're down $20. You're down 150. You're up 100 from what you initially sold, minus $70 you lost on the trade because you have to return these shares to the person you borrowed from them at a certain point. And that's the danger with shorting. If the stock kept going, that's only if the stock went up $5. If the stock went up double, you'd lose even more money. And what the Redditors planned to do, let me get back in my presentation mode, was continue buying the stock, continue driving up the price until the hedge funds were forced to buy back the shares to cover their losses. And then the stock would truly moon in what's called a short squeeze. And so in January of 2021, all hell breaks loose. We can see on January 12th, GameStop closes at $20 a share, a massive increase already because of these Redditors increased buying. Then the short squeeze begins. January 13th, it closes at $31. January 14th at $39. That's a doubling in 2 days, which is pretty big for the stock market. And the world begins to notice this uptick in GameStop. Elon Musk tweets GameStonk and links in the subreddit Wall Street Bets. Jordan Belfort, the real Wolf of Wall Street, talks about it. Joe Rogan is talking about GameStop. The top post of Wall Street Bets is a billboard of GameStop going up in price in Times Square. The entire world is talking about GameStop. It's everywhere. And on January 26th is when things get insane. This is the day that GameStop is the most traded stock on the stock market. The company is worth $28 billion and the shares are at 147. The squeeze is on. The hedge funds are being wrecked. The Redditors and competing Wall Street firms are getting rich. And now coordinated attacks begin. They begin against AMC, they begin against Nokia. These are other companies that should be dead and are being shorted massively. And now the Redditors are buying them to initiate short squeezes. We've never seen anything like this on Wall Street before. Melvin Capital, one of the funds that was massively shorting GameStop, is completely destroyed by their losses, and they have to be bailed out by a competitor. On the craziest days, GameStop's biggest shareholders made $3 billion overnight from the stock mooning, and then things start to get really wild. Discord bans the Wall Street Bets server. Facebook bans the Robinhood trading group. Robinhood is a brokerage that a lot of retail users use. And Keith Gill's initial $50,000 bet has turned into $48 million. This is insane. This is nuts. On January 26th, by the time the market closed, GameStop is at $347 a share. Now, fun story about me, I bought GameStop at $333 a share, and I thought it was going to keep going up. I remember I bought a fractional amount. I bought $50 worth, very small amount, but I bought it at $333, and I thought GameStop was going to go up forever. It's a very brutal awakening for high school me, because on January 28th, Robinhood, the brokerage that most Redditors use to buy GameStop, blocked people from buying the stock. That's right, you could only sell GameStop on their platform. It was blatant market manipulation. Now, you might be asking, why did they do that? Why would they block you from buying a stock? What's the point? Well, the reason why is because Robinhood, while they're facilitating the buying and selling of certain stocks, are required by the National Securities Clearing Corporation to keep a certain amount of that stock on hand to themselves as collateral. And usually it would be like 3% of the trading volume of the stock Robinhood would have to hold themselves. But because the volume on GameStop was so insane, the National Securities Clearing Corporation raised the collateral requirements for GameStop, and so Robinhood would have to hold a ton more GameStop than they had. They couldn't afford to do that, so Robinhood turned off the buy button. And by the end of the market, GameStop dropped 44% that day. It was brutal. February and March, GameStop continued to fall. I was heartbroken. And in April, Keith Gill would post his final update to Reddit, and it showed that he had made $20 million of profit, and his position was worth $34 million. It's one of the most legendary retail trades of all time. In June, he would make his final tweet, which is a kitten going to sleep, and he would disappear from the internet. He had done something legendary. He'd initiated one of the greatest short squeezes of all time, turned $50,000 into tens of millions, and showed that retail traders could fight against hedge funds if they all banded together. And this should be the end of the story. But if you remember from the table of contents, we talked about how Roaring Kitty found GameStop. We talked about how Reddit supercharged the trade, and we just talked about his disappearance. But something happened this week, this Monday, in fact, that's making everyone talk about GameStop again. On Monday, May 12th, 2024, Roaring Kitty came back to Twitter and posted this meme. You can see 130,000 likes, 26 million views. It went viral instantly, and in response, GameStop mooned. He posted the tweet here, and the stock doubled the next day. And then a day later, it was at $64. It was insane. He was posting movie clips every hour, motivating his followers. Roaring Kitty had returned, and GameStop was back. He was posting Beat Saber montages. The memes were glorious. You can see here this guy throwing out the intelligent investor, seeing that GameStop was up 20% because Roaring Kitty simply posted a photo. He had the power to move tens of billions of dollars just by remembering what his Twitter password was. He was the top post on r/Wall Street Bets. This guy, an unknown trader, turned 27,000 into 2 million in one day because of Keith returning. A 6,000% return. Just ridiculous. The volatility caused GameStop to be halted multiple times per day. Earlier this week, GameStop was halted 9 times on May 13th, and it still closed up 74% on the day. And the GameStop crypto token on Solana, which had nothing to do with the real company, had nothing backing it, it's just a shitcoin, was up 2,000% in 3 days. What? A market cap of $86 million. And you can see here, of course, the crypto bros reacted very intelligently towards that. This guy made $220,000 off the GameStop token. This guy responded saying, please sell. And he responded saying, are you gay? Come on, man. Dave Portnoy was back in. He bought $1 million in GameStop and AMC. Andrew Tate was tweeting about buying GameStop. The fun was back. We were back on and GameStop was going to moon. However, there are some warning signs that this time is not like the last time. For one, the short interest in GameStop today is much lower than it was back in the day. The short interest is at 24%. Only 24% of shares are being used to short the company. Whereas back when it had its initial huge run, there was a peak of 140% of shares shorting the company. Number two is that the mythical pivot to online sales that people expected from GameStop never happened. They got all this money during the meme craze and they didn't really do anything with it. You can see GameStop revenue, despite the bump up, is still on a steady decline over time. And number three is that retail is broke. I mean, we can see here that the amount of excess savings in the United States was much higher during 2021, which makes sense because there was tons of pandemic stimulus going around and stimmy checks and whatnot. And today, people just don't have the same kind of money to be gambling with they did back in 21. Another example of that is credit card delinquency surging. According to The Hill, there's almost 1 in 5 users that are maxed out in America. So the money just doesn't exist to pile in like it did before. And perhaps that's why a correction has begun. This is just today. On Thursday, May 16th, GameStop is down 20%. It was down 30% yesterday. So this could be the end. GameStop will never reach its previous highs. At least that's what I thought. Until one piece of evidence, one piece of data showed me that maybe I was wrong. Maybe the GameStop bulls are right. And we can go back to $100 a share, $300 a share, $347 a share. Maybe I'm just mad because I bought the top last time. That piece of data was Jim Cramer tweeted that GameStop is a terrible company. So now, of course, it's gonna moon. This guy is always wrong. And he said there's no reason to buy GameStop and that you should sell it.